Okay, good morning everyone. Thank you for coming. There is one question that keeps all the people sitting in this room and in the expo as a whole busy. I've been asking it for a few months. I'm hearing encouraging answers, I'm hearing some alarming ones, but it seems that everybody wants to know where retail trading is headed. Our panel of speakers is here to provide clarity on the issue, and I will leave you in trusted hands of the panel moderator, Brian Griffin, ex-CMC Markets and FXCM, and today the COO of the recently launched Settler Trading. Thank you, Brian.
Thank you, Jonathan. Thank you. Welcome, everybody. I'm going to give my panel 2 minutes each to introduce themselves and talk very briefly about the challenges they've faced in the last 6 months. And I'm going to start furthest over with Colby. So please introduce yourself and tell us how things have been.
Good morning, everyone. My name is Colby Gur, and I'm the CEO of Leverate. At Leverate, we produce first-class trading technology for almost a decade. We provide everything a broker needs, from the back end to the front end to risk management and CRM systems. And our pride is that over the course of this decade, we kind of looked into the future every time, again and again, and we're able to foresee what is coming in. And I'm sure that we'll discuss a lot where the retail trading world is going. But if you go into regulation, if you go into the mobile adoption, if you go into marketing challenges, all of that is where Leverate is already there and providing the solutions for the future.
Next, please.
Hi, my name is Ron Cohen. I'm the founder and CEO of Traders Group. Traders Group was founded to rethink the way the industry attracts and retains his clients through enhancing the experience of traders. We did it a long time with traders education and marketing. This expo, we launched Traders Platform and our platform Status Trader, which takes everything a trader needs and put it in one platform, creating an experience which is, there is no second. We invite everyone to experience it. I think the industry or the future here is going to a way that traders will need platforms that give them something that they can feel confident in trading, allowing them to trade easily with knowledge and successful.
Thank you, Ran. My name is Avner Ziv. My friends call me AB. I started my journey 10 years ago. I was studying Chinese for 4 years, lived in China. Around 9 years ago, worked at eToro at the early beginnings, then a UK-based gaming company in Gibraltar, and then 6 years at SafeCharge, payment processing, and the past year and a half I joined ZotaPay team. ZotaPay is a one-stop shop for payment hub technology that basically connected to more than 200 acquirer banks, PSPs, alternative payment methods, e-wallets, voucher systems, and everything that basically end user can fund his account. Our target markets obviously is Forex and binaries, and we are here today to speak how users and brokers are affecting from the changes that made recently by the regulators, by MiFID, by Visa, etc.
So, hi everybody. Good morning, and thanks to IFX Expo, to Moshe and to Gal. I think they made an amazing event again. It only kicked off yesterday, but it looks again as a promising and a very good version. I have the opportunity, I'm here speaking since the first IFX Expo in 2012. I remember it in May 2012, back then, 5 years ago in the Grand Resort. Things have been changed. I think that 1 year afterwards, we had a regulation panel and everybody was then registering companies in Anguilla and doing unregulated Forex. Many of these activities probably is a matter of the past now. And I think it will be really interesting to see what's going on. I'm Tal Ron, I'm based in Tel Aviv. I think we made it a marvelous panel and really exciting to see also new faces and familiar faces both here on the panel and here in the crowd. I think that what we'll see here in the next few years is we'll see more and more regulated brokers will see, I believe, a shift from binary options into Forex, CFDs, simplified Forex, which is a nice term if you heard about it, simplified Forex, but more and more legit. I'm not saying that binary options is not legit, but I'm saying that I think that in the next few years we'll see more and more classic financial instrument trading and back to the hardcore.
Good morning, everyone. My name is Fred Scala. I'm the Global Head of Sales at Forexware. The title of the panel is What's Next for Retail Foreign Exchange, and just talking to some of the panelists earlier, I reminded myself that I started 20 years before the euro, so I started in this business. So I've seen what's happened to institutional FX, originally trading by phone, and now the question is what happens next to retail FX. At Forexware, we build platforms, front-end, back-end, NFA-compliant application systems, online application systems, and risk monitoring systems. And I think, as Tal brought up the regulations, I think regulators are more concerned with risk, and we've seen what risk can do to some of our bigger friends back in the US and some of the issues that have taken on. Risk is a very important part of this business. We provide some extremely useful risk management tools. So I turn it over to Duncan.
Good morning, everybody. My name is Duncan Hansen. I'm glad to say I'm slightly younger than Fred. But I started in the industry futures on some of the larger exchanges around the globe. And since then, I've now become CEO of Tickmill in the UK. We are a relatively new broker in the space, but we've also now started Tickmill Prime. And certainly today, we are looking to offer anyone that may be a smaller broker or someone looking to get into the space in the broking industry, the potential for prime services. As a broker, we offer MT4, we're looking at MT5, and we're now looking to increase our exposure to other asset classes.
Thank you, everybody.
If you need payments, we can talk later.
Thank you. While you're on the mic, Duncan, we'll put the first question to you, and we'll keep it pretty generic. What do retail FX clients want?
They want opportunity. They want to be given decent products, and not necessarily complex products, but they want a full scope. So
Are clients still spread sensitive?
to a certain extent, but you know, when you look at a broker, you want to know that your funds are safe. You want to know that that company is going to be there for some time. You want the service. So spreads is part of that, but it's not the biggest part.
I'll bounce that question to Colby. Are clients leverage sensitive?
They are, but I think most of all, I think the question should go into the different kind of traders. So there are the veterans, there are the professional ones, there are the ones that are more price sensitive, execution sensitive. They would be the one to look for the brand name, obviously to make sure that the money is in a safe place. When you talk about the newcomers, the new traders, they're a totally different animal. And even within them, there are different types. There are the newbies, they have no idea what trading is all about, trying to learn from experience and so on. So they need to have a soft entry into that world. One of the things that we see at Leverett is social trading, that is very nice launch into this world. So you don't know how to trade, you don't have no idea what to do in terms of indicators and so on. It's all big Chinese to you, but you're able to start very slowly. There are the millennials generation, they work on mobile, period. They don't have desktop, they don't have web platforms. So we see a lot of trend based on generations, based on ages, going into working into mobile. So I think all the obvious parts are there, must be there, execution, etc. But the brokers needs to think who their real customers are.
How about Ran? Tell me your experiences with the average retail client.
I think in the end, and we all know our clients are risk lovers. They have a different degree of risk loving, but each one of them has a risk lover. Each one of them has a risk mechanism that allows him and make him trade. And now the one thing they need from us as all the brokers is a platform that enables them to do that with confidence. All the information they need, they shouldn't look for it. It should be on the chart. All the expert advisors, social, like Kobe is saying, simplicity, like Tal is saying, this should be embedded inside the trading mechanism. We should think about trading in Forex not only in lots. There's other ways, risk amount, trading amount, ways to make Forex trading simple to the end user.
Abby, talk to me about payments. What does the average retail client look for? Okay, so in regards to the first question first, what I believe that traders are looking for is the best product available. They are much more mature than they used to be. Let's say 7 years ago, we would have seen only professional traders using MT4 or MT3 back then. But today, we see this market is getting opened for more newbies, unprofessional traders, and people that would like maybe to buy a share of Facebook or Google. And they don't have the tools or abilities to do Fibonacci charts and so on.
Or Bitcoin.
Or Bitcoin. And I think today the big challenge is how to enable these products to the user. From payment side, the user, we have two aspects. A, it's localization. Users, and I define it to 7 different regions around the world, whether it's EU, China, Japan, Southeast Asia countries, GCC regions, CIS, which is Russia, and South America. In each region, we have different providers, local cards methods, local wallets, different than just regular Visa and MasterCard. So the user, whenever he's engaging with the product, and in order for him to feel more confidence, he would like to see the most preferred payment of method, what he's going to buy in the supermarket. If it's Kiwi, whether it's Moneta, whether it's JCB. So on the payment page itself, he needs to see also a wide diversion and a wide range of payment options that are not just Visa, MasterCard, the traditional. Secondly is about the security of his funds and how fast we can deliver products for paying payouts, especially the payouts. Today, a broker, for a trader, for a user, is supposed to be the bank. So he has a balance. I have my bank account. I have my card. I can top up. I can withdraw my funds. I need my funds within 24 hours maximum. In China, for example, you cannot survive more than, let's say, 1 or 2 hours payout. Already, people will write you on the forums that you are a fraud or something like that. So the payment aspect will make the product, because it's, in the end of the day, it's payments. We're talking about money and money service industry. So also the pay and the payouts should be easier and more secure for the end user. So is payments now part and parcel of spread, leverage, executability, charting? It's equally as important. Yes. Here we can see that the industry as a whole will take less risk on a ticket size amount. So the number of lots or number of deposits the end user can do is relatively less than he could have done a few years ago. That's why we can see shift for wire transfer solution or online bank transfers that enable users to send more money or higher amounts of money. For credit cards, we can see maybe $10,000, maximum $20,000 deposits, which means accordingly number of lots you can execute on the credit platform. Tal, any views on that? Any views on that? What do clients want?
Yeah, well, I totally agree with what AB said. Like, if in 5 years ago, 6 years ago, lots of focus of us and our clients was refining the terms and conditions. We had dealing with some labor lawsuits of key employees moving from one broker to another. I believe that in the last year, the most critical issue of our clients in order to keep alive and above the water is exactly stuff that AB is now speaking about. The wire solutions, the banking, the regulation, and making sure that they can get the money and pay promptly. And what happens, like in the Far East, it's even more. AB said that if a client in Southeast Asia, you mentioned China, but in Southeast Asia in general, won't get his withdrawal in 2 hours, he will write an email. No, he can even come to your booth in Money Fair in China or in Shenzhen or anywhere else and come and start, or come to your office here in Cyprus and and deteriorate your brand and your image because you didn't pay him in 2 days. So this issue of payments became a really focal point. And the industry is going into new solutions in the wires, and not only in wires. We have now clients that are dealing with bitcoins, and the bitcoins is also becoming a very critical and interesting instrument. You can see people or companies like Bitfinex that gives clients to go on and to trade on bitcoins and on other virtual currencies. But again, you spoke about the leverages. We don't see like 50 or 100. With Bitfinex, it's threefold leverage, and I think that's enough for clients to feel energized and to trade on them. So to summarize, we still see more and more issues that have been in the past, like the bonuses and the terms. But I think that the most critical issue that we see in our law firm, and we work with many of the exhibitors here as their legal counsel, we see, I believe the number one issue is now the payments, and to make sure that the regulation that they will have, whether it's Vanuatu or MiFID, will get them the ability to get the payments fast and make sure that also the payouts will be fast and the client's funds will continue to be secured.
So it's a brand issue.
It is. It's a brand issue. It's an operational issue. It's all together, and it's a critical issue because if a client has $200,000 stuck in a bank in Singapore because the bank in Singapore doesn't recognize your license, it's a critical issue. The broker cannot pay the salaries, and he won't be here next year.
Thank you. Fred, same question. What do clients want?
Well, I think it's the same for both retail and institutional B2B clients. They want security of funds, security of knowing that their partner is going to be around, a fair playing field to know that prices aren't being manipulated, and they want execution. We see it in the B2B world where credit was a very big issue in the last several years since the S&B event. It's very difficult to get a true prime broker now. Where Citibank, one of the senior members of the Citibank Prime Broker Group had told me right before that event, he says, you know, we have 40% of the FX market, and I don't know if we're doing the right thing or doing the wrong thing, and time will tell. And now we've seen them pull back a great deal, and credit's become a big issue. So people like Duncan are moving into the prime of prime space. We've seen a lot of people trying to fill that gap, provide liquidity, provide security, and provide a fair playing field. We've done a lot of that ourselves. We've worked in that to try and bring clients through it in a more focused way. You know.
Well, let's talk about liquidity. I mean, what is liquidity? Maybe we'll bounce that question back down to Kovi.
Liquidity for Leverett is very easy. For us, it's just another bridge to the liquidity providers out there. I think in many ways, for the big brokers, it's a mean of life. You can't live without this. It's something that someone must have in order to serve his customers. The thing is that we see a lot of brokers that still live on the B-book side, that still are interested in making the extra buck from B-booking the traders. And for them, liquidity or risk management as a whole is less important. So looking into the future in terms of what regulation would do, I think that we'll see less B-book trade brokers. Again, brand recognition, the things that were mentioned with regards to payments and banking will also impact the small scale, and we'll see a lot bigger A-book and traditional brand names. And from that, obviously, the liquidity will become more and more important.
Okay, thank you.
Yeah, I mean, I disagree. I think the risk is going to wind up somewhere. And I think brokers have realized that holding risk is what makes them profitable. You know, so whether it winds up in the hands of the bank or it winds up in the hands of the broker, somebody's got to take that end risk. So many of the people sitting in this audience have realized that, and they've lived with the premise that 80% of the clients are going to lose their money. Well, that's the way it was over the last several years. Clients are getting a little bit more sophisticated. There were so many interbank traders that were sitting in interbank dealing rooms 10 years ago that aren't there anymore. The banks have downsized to the point where a lot of those people have taken their $10,000 and $20,000 account and opened up accounts with brokers. So they've become clever, and it's just a matter of the brokers becoming a little bit more clever in how to manage that. So there's not a one-size-fits-all in terms of risk. I think you have to know who your clients are and proportion that risk accordingly.
Duncan.
Yeah, I agree. The brokers got to become far more savvy now about how they manage this risk. And there are plenty of routes that they can do that. It's about blending what they have. It's about finding the right execution spot for them to offload that risk, but also keep everyone happy. And a client himself, wants to know whether he's STP, whether he wants to know whether he's, it's going to be internalized by a management side. So one has to think from client all the way up through to the ultimate risk taker, which is a bank somewhere.
But one note on that. I think that every broker needs not to be ignorant to the fact that the traders are well savvy, read a lot, know a lot. It's not the 20 years ago that someone went into some brokers and put his money and hoped for the best. Right now, all of the traders know what they do, know what to look for. I'm not talking about the newcomers, but the old ones. And the ones that will identify that their brokers is edging against them within the system will take this as a bad point. So I agree. A broker needs to be in a position that he takes more money from wherever he can and whenever he can. But traders will be extremely sensitive to know that the broker is not against them. And it's on a same level field, and everyone knows that broker X does B-book to that extent and broker Y does not, and they will go where the money is more secure and more safe, and there's no conflict of interest between the trader and the broker.
Is that client sensitivity regional?
Extremely regional. We see a lot of the brokers in the EU are much more regulated in their way of working. It's simply a matter of evolution. When you go to the east side, you see a more sophisticated trader in terms of the trading capabilities, but much less sensitive to such kind of B-book behavior from the broker side.
Maybe a related point, how the product is delivered. We spoke about GUIs, front ends, we've spoke about mobile apps. What about API?
Everything is different. Again, going to the payments, Abby will probably tell that. It's different in each part of the world with a different acquirer or anyone behind the scenes. From a technology perspective, you need to adhere to more different opinions, regulations, and rules. If you just look at the EU, it's no longer just ISEC. You have now the French regulation and the Spanish one, and obviously FCA. And although everyone is under the MiFID umbrella, the flavors is sometimes totally different, and the interpretations are different. So for us as a technology provider, we must provide the different flavors. If you go to the east, again, different. China is way different from Indonesia, Singapore, Philippines, Malaysia, and so on. So for a broker that wants to be international or global, the compliance challenge is not just on the way his compliance officers and operation works, it's also on the way our systems are adhering to the regulation. And from leverage perspective, as we have customers almost all around the world, we see a lot of requests and demands from our customers to be compliant for specific regions, for specific regulation.
Okay, thank you.
I agree with what Kobe said regarding the regulation shopping. We see it as a trend. First of all, you spoke about like that in Europe, if you compare it to the other jurisdictions, there is difference. In some places, you don't really care if you're a trader, if it's A book or B book, if your broker is really covering itself with full liquidity, or it's like a B book, old school broker. In GCC countries, in Arab Gulf states, or in, let's say, phrases like this, brokers which are targeting clients from Bahrain, from Saudi Arabia, we'll see in most of the cases, unless they're a UK regulated broker, there will be an MT4 or an MT4 clone, with either non-regulated or unregulated, and in most of the chances it'll be B-book or classic B-book in most of the cases. But as I said, in very much in the European in the European clientele, it will be more A-book and more, let's say, more regulated. But the interesting thing is that there are more and more brokers that want to go like they go to the supermarket and they want regulations. So you can see, and in recent years, we see more and more brokers that have different type of regulations, and that's what we call regulation shopping. So if let's say 5 or 6 or 7 years ago, the people opened the Seychelles company, opened the Samoa company. The Samoa is now kicked off because what happened with Mossack and Fonseca. Dominica also, since February 2017, is not a place for unregulated Forex or binary anymore. So normally people now use a Marshall Island company for one, and then they use a Vanuatu license, and then they add a MiFID license. And as Kobe said, it's not only Cyprus. People do MiFID also through Greece. People do MiFID through FCA, even though their days are counted, because as we all know, regarding Brexit, we don't know what will happen with all these FCA-regulated companies. But this idea of having a broker that takes the regulation from this and that, and have an office here and there in Hong Kong, it's becoming more and more frequent, and not only for the big brokers, also for the smaller ones.
Okay, thank you. Duncan?
I wouldn't say it's regulation shopping, it's more regulation protection. Brokers have to do that. It's a bit like a sort of game of football. You start off, you get the ball, you get the team, the staff, everyone like that. You have a game, and then the next day you turn up and there's a rugby ball, and then you're told to play rugby, and you don't even know what the rules are. So you have to ensure that you or try and predict where the market is going. And one's not putting the blame down on the regulators themselves, but you've got to ensure that you can operate, not just today, but tomorrow and in the future.
Fred?
Yeah, I mean, we see that as well. We do a lot of white label startups, Chinese. We have an office in Beijing and Shanghai, and they do a lot of white label, gray label startups. And a lot of these groups start up as unregulated in an unregulated venue. And as that proof of concept wears itself through, then they start to move to a regulated entity. And as they grow, their regulations grow with them. And we've seen that happen over the last 2 or 3 years, and it's still beginning. People look for, as I say, the unregulated, then move to a 125 FCA regulation, and then move on to the 730 if it gets to that point, once they realize the capital.
Abby?
So what we can define today, especially from the payment side, that you have the big players, the big groups, owns multiple regulation in order to be compliant in several jurisdictions around the world. So you can see big players that has EU under MiFID, they have Seychelles or Belize license for the rest of the world, and they even have either Vanuatu or a company which is not regulated at all for, let's say, the toughest markets like Japan, for example, where it's prohibited. So the big players, they have more than one regulation. They cover themselves, as you called it, the protection suit for regulations. And depends on the IP or the region the trader came from, they will divert him to the regulated channel or to the best channel for them that will be less exposed. Now, these groups, obviously, in terms of banks, you have different banking services for Belizean regulation than the MiFID ones. However, these guys are taking the package of the group, the whole group, to European banks, and basically submitting everything into the bank, and enjoy, for all the activities, they enjoy very low pricing, European pricing based targets. So at the end of the day, the whole group enjoy also a very highly regulated environment.
Ran, how sensitive is the average retail client to regulation?
Well, I think it is important. Regulation is a must-have today in the industry, and we understand that payments, everything is basically connected to it now on the blood, so it must be, once the entity is growing, like my friend says, growing from unregulated or starting from regulated. But I think in the end, and this is something I heard before, in the end there is a trader sitting in a trading platform, pressing a button to trade, and he gets a try again or requote. And we see it in the financial commission I'm a part of. We see brokers that doesn't have the most amazing risk capabilities, and the execution, I think, is one crucial part that brokers needs to pay attention. If it's other risk companies that are doing it for them, or they should have done it in-house. But regulation is not the only thing they need. They need capabilities to allow their traders to actually trade.
Well, what I'll add is retail traders are gamblers, right? That they start with the premise that they're going to take a $5,000 account and make $100,000 on it, right? Which is unreasonable to begin with. And I don't think they're looking at the news of where the problems lie with various brokers. They want to trade, right? It's the institutional guys, it's the brokers out here who are saying, I don't feel safe with putting my money with this broker because he's got a bad reputation. I don't feel safe putting my money here. Where the retail trader, he sees a tight spread, he sees a fair execution policy, he wants to trade. We're still seeing that with brokers who've had their names in the news recently with a lot of scandal attached to them that are still doing reasonable volume. So traders want to trade.
So it's back to my original question. What do clients want? I mean, they want a degree of regulation, they want payments, they want leverage, they want...
And they want to get thrilled.
They want
In
clarity.
the end of the day, they want to get thrilled. Tell me if I'm wrong. That's what we try to produce. This is what we try to provide them, an experience to thrill them in the end of the day and to make them come back. To come back and to stick with our company, our platform. And this is something everybody here in this room is looking for, stickness in his traders.
So the client is changing, evolving?
Yeah, I think at the end of the day they are. You see again two trends. You see the trend of the old school traders that are in this business for the last 5 to more than that years. They're already very savvy with trading tools, with analyzing reports, with working with technical instruments and analysis and so on. They're very price sensitive, and obviously execution is part of it. They want to trust the brokers. The other trend that you see between different traders are the newcomers. And as I mentioned, we look at them in terms of ages, and honestly, Liquidity sits on tons of information that we can analyze all the time. So you see a lot of new generation coming in. I'm talking about the millennials, the 20 plus, the ones that want to manage their own money, not give it to someone else to manage for them. And for them, it's totally different game. They're learning very fast. They're taking the courses that Ron mentioned. They're learning a lot from YouTube, from podcasts, from whatever instrument that they might have. They're trying a lot with small amounts. And for them, I think the experience, and as Ron mentioned, is more than anything. By the way, not just with trading. This is the way of life. This is what they expect from their Snapchat or from Facebook or for whatever. This is what they expect. Great experience, very simple and easy way to trade. And everything that is more complex, everything that is more sophisticated, they will try it. Obviously, in 2 years, when they're into the game, they will move there. But at the beginning, they're looking for something very simplistic, very straightforward, and they will stick with the ones that give them the good experience.
Duncan?
Yeah, I totally agree. It's the clients are getting far more sophisticated, and quite rightly. And there's an enormous amount of information out there. But regulation, payments, well-capitalized companies. You can find it on the internet. Go to Companies House. You can check out a company, see how well they're doing. But probably more importantly, it's convenience. A one-stop shop for a client is the ultimate goal for them. And I think as a broker, that is where we're trying to get to. We have MT4, MT5, but we need multi-asset platforms right there. And this is where clients, I think, are going to be really, they're going to push the boundaries because they can start trading all these different asset classes. They can trade with AEs or any other sort of algorithms and artificial intelligence. And that brings them up from not just a retail client, but it's like a mini hedge fund now. And that's where I see the market going.
Tal?
Yeah, also the marketing, and something has been quite changed in the last year. All these funnels of make money, how to become rich. In the last year, there was the M. Fune saga. There was a guy called M. Fune who all London, all the tabloids spoke about Enfyun, that he was working in the McDonald's, and then a few months after he started trading in binary options, he bought a Bentley and he coated it in gold. I don't know if all of people didn't know about that story, but it was amazing. You know, you opened the Sun and you saw that story about that guy that from McDonald's instantly by trading with some unregulated broker become a millionaire. Now, if you delved more deeply in the story, you understood that this guy, Enfyun, that's his real name, he was actually an affiliate of that brand. And he actually did something very interesting. He invented a story, he made himself rich very quick by buying a 20,000 pounds Bentley and coating it with some kind of paint. And that was his story. And when all was discovered, it did a very bad reputation to the industry. I think that all this fake trading software and lots of funnels that had been traditionally being serving binary options funnels, we don't see them anymore. We see now more and more solid marketing, less fake news. As we all know, this term fake news that has becoming in the last year very trendy. Less fake news, more honest, more stuff like Andrew. I see Andrew from Finance Feed has been reporting all this fake news in his paper for the last months. We see less and less, and I see that that's one trend that we now see. A second trend that I would refer you, I read it a week ago when Finance Magnets published a very interesting industry report on moving the people to Eastern Europe and the cost of outsourcing. I think Avi Mizrahi posted it. And it's interesting to see that even regulated brokers now use these places, but make sure that all of these personnel are working according to the law with good terms and conditions, with good marketing. And I hope that this will continue. I think that for all of us to meet here each year, here in Cyprus and in Hong Kong, that has to be the direction. I believe that all of the people here on the panel agree.
Abi.
Yeah, a couple of remarks on that. So I'll start and say today's crowd and traders, basically they have limitless amount of information. Google, mobile, we have powerful smartphones, each of us in our pockets. Not me, but each of us. So in one couple of clicks, you can see a person's website, where he was born, where he lived, who he was studied with, etc., etc. A trader today, he doesn't have to be a guru to understand that the Brexit or something happened in Manchester had a bombing, so maybe the pound GBP will go down. So the amount of information, the flow of information, the freedom of information is much more flawless than it used to be. And therefore, traders can execute much faster. Now, the other side of this issue is that traders don't like to work, or any people don't like to work so much to get this information. So for them, they want just a couple of clicks to be able to execute the trade, to change the trend, to add the top up, to maybe to change the lever rate, and so on and so forth. So what we used to see is like traditional, professional traders. Today they become gurus. They used to be traders, regular traders at a brokerage. Because they know how to trade today, they became gurus or MMPs, PMMs, where basically they teach other people via social trading platforms. People can trade on them. They will get kickback on their skills and specialties. So basically today we see a swift and change. Individuals around the world that, let's say in eToro or Tradio or any other social trading platform, has 20, 30, 40,000 followers, meaning 40,000 people that execute the same tradings that they are. It's more than the biggest investment house in Israel, number of people, for example. So this is the accessibility. I'll stop.
Okay, go on.
I think the key word here was teach. Brokers, as we see it, going to educational marketing. They take it to the, like they say, to the regulated level. They produce marketing using educational content, and basically this is the new way of attracting clients today. We see it a lot in traders education. Most of our content is embedded in a lot of brokers, but the last year we have numerous offers of being or to integrate our content to media providers, networks. We see that as the new way of marketing. People are going to get inside the Forex, first of all, but by knowing what it is. What is a PIP? What is a leverage? How do you execute a trade? How do you open an account? The basic things people need to know before they even go and register in your platform. When they know that and go later to your platform, everything is going a lot more easier from getting the compliance you need from them to trading.
So, what keeps clients trading?
What keeps clients trading?
Yes.
The continuous confidence you provide them. Streaming of broadcasting through the websites of broker, which allows them always to get more and more information and confidence in trading, making them a bit more trader every day.
Fred?
I think what keeps clients trading is the dream. You know, there's the dream that they're going to hit the next one. They're going to catch that next wave 3 trend. They're going to catch that next 300-point move. I had a conversation with a former CEO of a large U.S. broker many years ago, and he said, you know, I'm selling the adult male fantasy. He said the young man's fantasy was, you see those 2 beautiful women, I dated both of them. The adult male fantasy is, do you see dollar yen? I bought it at 102. You know, so, and I think that's what we are. We're still selling the fantasy. That, you know, there's great opportunities in this market. I've been, as I said, for a long time. I've made a very good living doing this for a long time, and I'm sure a lot of us out here have done the same thing. But the idea that you're going to take a $3,000 account and make $30,000 a year on it, or $50,000 or $100,000, it's unsustainable.
Colby?
First of all, it's the bankroll. I mean, if you lose the money, you don't have anything to trade with. But I totally agree. It's the dream that keeps the traders coming in. And as long as they have the funds or the belief that they can do something, and they kind of wake up from the dream very fast. They realize 3,000 will become 300, 3,100, and so on. But they will still wait for this one event that will make them rich. But even on that event, they kind of think they're gods now, and they can do it again and again and again. And at the end of the day, I think that this is what everyone, as every broker sees, this is reality. There's only very few traders that actually make a living out of it.
Duncan?
We see a lot of algo trading. You know, it's a large part of our business. So I don't see it going for the big one. I see it as a challenge. Individuals want to challenge themselves, and if they've got the right tools, you know, you can start creating a strategy. You can back test it. You can forward test it. Anyone can do that nowadays. So it's not. I don't subscribe necessarily, although it does happen, to going for the big one. But it gives people a more cerebral sort of escape, I think. And if it works, then you become a hedge fund.
Yeah, I mean, there's no doubt about it. The only way to stay in this business is discipline. And if you have a model, and the model is disciplined of how you get in and how you get out, and you every time you enter a trade, you have your exit strategy in place, that's the only way you're going to be long-term successful.
We're coming to the final questions, and we'll start with Duncan again. And it's a pretty straightforward question. Projected changes in the industry over the next 12 months. You can talk about regulation, you can talk about product, you can talk about how it's delivered. It's whatever you feel. Next 12 months.
Next 12 months, we've come off the back of a strong growth, and we anticipate our growth to increase exponentially as well. We are, you know, we're really confident in the business, but you've got to keep pushing. Regulation.
How are you doing that?
Well, it's not reinvention, but we're looking for new products. We want to offer, you know, futures, options, individual equities, you know, at some point, you know. The one thing that's sort of halting, I think, the whole industry at the moment is regulation. You know, we've got MiFID II coming up. We've got the EMIR rewrite, and these are really sort of important things, certainly for an FCA-regulated entity. So we want to push on, and we will do. But the next 12 months are going to be really interesting. If the FCA come out with some, you know, leverage policy that doesn't work, if there's some negative balance issues that they want to impose, you know, these things are game changers.
Okay, thank you. Fred?
You know, I was up here last year at last year's panel, and I think I'm saying the same things again for the next 12 months. Risk management, I think brokers are more focused on risk management. As we've all said, clients are getting more sophisticated with their algo trading, with their discipline trading, and brokers need to manage risk. It's what the regulators want to see. So we're providing tools, we're upgrading our tools, and it's one thing that we're really focusing on is providing better risk management tools to the industry. And the second thing that I said last year again is MT5. We're seeing more and more focus on MT5. We put together a gateway CQG pricing for equities and futures to be able to pump into MT5. We've just completed our bridge for overall OTC FX and CFDs, full depth of book for asset managers. So I think we're seeing more and more, I know we're seeing more and more inquiries about MT5 going forward, and hopefully this year it starts to move.
Thank you, Fred. Tal.
Yeah. Well, what we'll see, and we'll continue to see in the next year, I believe, is more accurate marketing, more honest brokers, less non-regulated ones. And you spoke about AB, even starting with the Vanuatu license. It's also a good step from moving forward from the Marshall non-regulated one. So I think that probably next year there will be less and less non-regulated brokers. And on a global scale, what I do think that will be like conversions of all the financial entertainment sectors. And I believe that more and more brokers, even the guys with the nice suits, will start operating other operations. Maybe it can be a Bitcoin trading arena, maybe a casino. You know, people think that casino and online gaming is here and financial trading is there. It's not that different. You know, the operation is not that different. I think that at the end of the day, in the next year, we'll see more and more brokers going into casinos, online slots, having Curaçao regulations. It's not that far. It's not that far, and I believe that it will continue. Definitely will continue.
Okay, thank you.
Cool. So it's going to be a very interesting year for us. First of all, I think the Forex industry has changed tremendously in the last 6 months. And we see these changes are going and growing in the next 6 months as well. The main reason is Visa US acquired Visa Europe and imposed basically their regulation, their compliance procedures on the European funnels as well. So we have MiFID II and SISEC II accordingly, and Basel II. I'm not sure if you're aware of that, but it's new set of regulation, how EU banks should transfer money in and out, how to conduct the compliance, and what procedures. Basically, the real changes, or the major changes, is that EU company must have physical offices in the EU, must transmit the URLs, execution, everything from the EU. So the offshore regulation, what we used to know with a subsidiary in the EU, just for processing purposes, is not relevant. Therefore, and also we see the biggest changes is on the regulators. Every day, every week, we hear a new set of regulation or rules that brokers need to comply. We see now they're not only for the brokers themselves. It's about the leverage, it's about the bonuses, the name of their sales representatives, the IB and marketing divisions, what you can say, what you cannot say. So basically everything is going to be more regulated, or these guys are going to shift into the non-regulation or different opportunities, as Talron mentioned. We can see today the obvious from binary option to Forex, but we can see also some of them are going to diamonds trading or Bitcoin or cryptocurrencies and so on. The main thing is the brokers has to stay a cost-effective operation. Otherwise, in today's world, they won't be able to last for the long run. And what I wanted to say last and to conclude my saying, we have to remember that always the user, in the end, the trader, is the one we're approaching. The user experience, what he will feel. Remember yourself when you go, and I'm sorry about the analysis, but if you go to a casino, you're having fun, you don't mind to even lose $1,000 that night because you get an experience. I'm not combining, I'm not saying Forex is casino, but if a trader will get an experience, he will get something nice, he will get good customer service, support, emailing, and so on, he won't necessarily be upset when you lose the money.
Okay, thank you.
Agree totally. I think, first of all, in the next year, we will see growth in both unregulated and regulated brokers. I think the dream exists not only in traders, it exists also in brokers that wants to become brokers. And like we said, they would go to the unregulated at the beginning. I think to differentiate yourself in the next year as a broker, you need to choose your products carefully. Make sure your products enables the traders the experience he wants and needs, and make sure it's stable. Stable, and of course, risk department are a part of it. Marketing, like we said, is going to be more legit to get traders that will stick with you and not play with $200 and leave. And I think experience is everything.
Okay, thank you. And Kobe.
I want to say regulation because this is the obvious answer, but I want to take it from a different angle. One, I think that the regulators will not only focus on the good guys, not only on the one that already licensed. I think that one of the things that we'll start seeing is them chasing after the unregulated ones, trying to block them, trying to block the internet side, trying to get cease and desist orders and so on. This happened in other industries, exactly the same stage in the evolution that the retail Forex is, and we'll start seeing this more and more. Simply because of the fact that licensed brokers that invested the money are suffering from declining revenues. So they will start complaining to the regulators, they will come into effect. The regulators will scratch their heads and say, okay, these guys are right, let's start chasing these guys. On the other side of regulators, I think that the big brokers will start looking to other jurisdictions. Playing just in their normal field, their neighborhood, will stop. Obviously, this is their home base, this is what they continue to do, but they will start looking into new revenue streams, new countries, new places where they can basically have the same operations and get new money flowing in. The most obvious aspect would be either Latin America or the East, mainly around Southeast Asia, not necessarily China, although we see more and more international brokers stepping into China, but it's a totally different beast, and no one really knows what to do there and how to operate there. Leverett is there in the last 2 years, and I'm proud to say that we gained a lot of experience, but in that sense, we're still learning a lot. So this is when it comes to regulation, and the other point goes to the cost effectiveness that Abe mentioned. The pressure on the cost side, think about the brokers. They're paying tons of money to bring traffic and to the sales team. They need to be more cost effective, they need to lower their cost structure. And probably the only way to do this is through proper marketing, more automated marketing. The technology side at least allows now more sophisticated deep learning, big data elements to focus what is going on. And we already see more and more brokers implement very sophisticated tools to enable them to cut the cost on the marketing expenditures.
Okay, everybody. Jonathan?
Thank you very much. We have room for one question. Don't clap just yet. We have room for one question before we head to the next panel. Okay, this is good news for me. Are we sure we have no questions?
Questions from the audience, anybody?
From the audience, that is.
Any questions from the audience?
Okay, great. It seems you all know where retail trading is headed. Thank you very much. Don't go too far, because soon enough, within 10 minutes, we will start our next panel delving into regulation, a very important topic, as you all heard. Thank you very much, and thanks again to our panelists.